We solve question on banks. We have done airline and shipping company. We have done banks. So today we are going to look at taxation of real estate investment business in Nigeria. So how do we tax real estate investment company? What are the bases? What are the income subjected to tax for a real estate investment company? So that is what we want to look at today. For real estate investment company, they basically deal with properties, purchase and sales of land, purchase and sales of buildings. Most of their income can be coming from agency fees, management fees, profit on properties, and so on, like that. The real estate investment company, how we tax them has been stated by relevant section of the company income tax. There are some provision in the Company Income Tax Act that states the guideline on how real estate investment company will be assessed to tax. One of such provision is the section 19 of CETA. Section 19 of CETA, also section 23 and section 24 of the Company Income Tax Act 2004 as amended. All these have been stated in the relevant section. Real estate investment business, investment company, they have an investment, a pool of fund from different investors. So many people, they invest their capital, their fund into real estate with an objective of generating return, because they believe that real estate is one of the secured investments. So they try to invest in real estate. Now, what are the income of a real estate investment company? How do we classify income of a real estate investment company? How do we classify their income? One of the real estate investment company income is called rental income. Rental what? Income. The income received from the rent of properties. That is rental income. We have another one. Dividend from another real estate investment company. Dividend from another what? Real estate investment company. Dividend from another real estate investment company is an income is an income. Another income of a real estate investment company is gain from disposal of assets. When you dispose land or you dispose property, an income to the real estate investment company. Part of the other income also means agency fee or brokerage fee, other income or miscellaneous income. They are part of the income of a real estate investment company. Now, how do we tax the income of a real estate investment company? Taxation of a real estate investment company. How do we tax income of a real estate investment company? If you want to tax income of a real estate investment company, we have to look at some relevant section of the CETA, like section 19. Section 19 of CETA said rental income and dividend income of a real estate investment company will not be subjected to tax if such rental income or dividend income was distributed to the shareholder of a real estate investment company if at least 75% of the rental income or dividend income was distributed to the shareholder within 12 months after the end of the financial year. In such case, that rental income or dividend income will not be subjected to tax. The rental income or dividend income will not be subjected to tax if the rental income is distributed to the shareholder of the real estate investment company. In that case, the rental income and dividend income will not be subjected to tax. Section 19 of CETA go further, saying that at least 75% of the rental income and dividend income must be distributed to the shareholder of real estate investment company. 75% of the rental income and dividend income must be distributed, and the distribution must be made within 12 months after the end of the year. So what we are saying basically is that out of the income of a real estate investment company, rental income and dividend income may not be subjected to tax. Others too are subjected to tax, like brokerage fee, they are subjected to tax. Gain from disposal of assets, they are subjected to tax. But looking at rental income or dividend income, this may not be subjected to tax. Why? If such rental income or dividend income was distributed as dividend to the shareholder of real estate investment company, in that case, it will not be subjected to tax. That is what that section is saying. Section 23 of CETA is saying that if rental income and dividend income is not subjected to tax in the hand of the real estate investment company, that means the rental income and dividend income is treated as non-taxable income. Whereas the expenses relating to rental income too and dividend income will not be allowed as an allowable expenses. The expenses relating to rental income and dividend income will not be allowed as an allowable expenses. That is what section 24 is saying, 23 is saying. It's saying that when you treat rental income and dividend income as taxable income, the relevant expenses too shall not be allowed as an allowable expenses. That is stated in the section 24 of CETA. Section 23 is explaining that once rental income and dividend income is not subjected to tax in the hand of the real estate investment company, the shareholder of real estate investment companies too, while receiving the rental income and dividend income as a dividend, that dividend will not be treated as frank investment income. That means that dividend will not be subjected to withholding tax in the hand of the recipient. Since the company paying the dividend, the income to them is a non-taxable income. The shareholders too, receiving those income, the shareholder of real estate investment company receiving the income too, they will not pay tax. They will not pay withholding tax on the dividend received. Why section 24 is saying that any expenses accrued to rental income and dividend income when rental income and dividend income is not subjected to tax, any expenses accrued to them too will not be allowed as an allowable expenses. Since the rental income and dividend income are not subjected to tax. But in a year, when rental income and dividend income are subjected to tax, expenses accrued to them too will be treated as an allowable deduction. But in a year that they are not subjected to tax, their expenses too will not be subjected to tax. Section 80 is talking of withholding tax on rental income and dividend income. The withholding tax on rental income and dividend income received by real estate investment company, that withholding tax shall not constitute frank investment income. And in that case, when rental income and dividend income is made to shareholder, is distributed to the shareholder of a real estate investment company, if the rental income and dividend income does not meet the criteria of non-taxable income, the real estate investment company will deduct 10% withholding tax before payment of the rental income or dividend income as dividend to their own shareholder. So that is what all this section is talking about. Now, let's look at some illustration. Illustration 1. Let's look at illustration 1. Somebody should help us read. Illustration 1.
Yes. Yes, sir.
You can go ahead.
Okay. Mark Incorporated Limited is a real estate investment company that operates under the real estate investment scheme. The company received a rental income of 500 million, 100,000 during its financial year in 31st August 2022. During the board meeting, it was agreed that 60% of the rental income should be distributed to the shareholders within 12 months and was effected as directed. Required, determine the assessable rental income for the relevant year of assessment and comment appropriately. B, comment on the tax implication and effects, assuming the management of MAC Incorporated Limited decided to distribute 85% and retain the balance.
Thank you.
Yes.
MAC Incorporated Limited is a real estate investment company. REIC. They operate under real estate investment scheme. Look at the company. The company receives a rental income during the year. That real estate investment company, they receive a rental income of how much? 500 million. As at 31st August 2022. During the board meeting, it was agreed that 60% of this rental income should be distributed to the shareholder within 12 months and was infected as directed. A, determine the accessible income, accessible rental income. What question A is saying is, you should determine the rental income that will be subjected to tax. Looking at question A, that 500 million, is it going to be subjected to tax or not subjected to tax?
Subjected.
Why?
It's less than 70%.
75%.
Why?
It is less than 75%. It is less than 75%. So, question A, the rental income, 500 million. Rental income exempted from tax, according to the law. In the question, they distribute 60%, which is 300,000. But the law requires them that they must distribute at least how many percent? 75%. As a result of that, that rental income, there will be no exemption. All the rental income will be assessed to tax. So our question A, the accessible rental income will still remain 500,000. So they ask us to comment on the results. Comment appropriately. What is our comment? A real estate investment company shall not be exempted from tax on rental income and dividend income if it does not distribute a minimum of how much? If it does not distribute a minimum of 75% of the rental income or dividend income to the shareholder. And such distribution, if this distribution is not made within 12 months after the end of the year, in which the rental income was earned or dividend income was earned. So in this scenario, the company did not meet the minimum requirement set by the Act. Henceforth, the entire rental income will be subjected to tax. B part of the question. What does B say? B said that comment on tax implication and effects, assuming the management of MAC Incorporated Limited decide to distribute, what if they distribute 85%? Let's look at scenario when 85% was distributed. Look at the rental income, 500 million. Distribution to the shareholder, 85% was distributed. Since what was distributed is more than the required distribution, the required distribution by the law is 75%. That means the entire 500 million will be exempted from tax. In this scenario, we will not have accessible rental income. In this scenario, we will not have accessible rental income. Since what was distributed is more than 75%. So in the notes, we need to let them know, since the real estate investment company distribute more than 75%, that rental income and dividend income shall not be subjected to tax. And the distribution was made within 12 months after the end of the year. Let's look at illustration 2. Illustration 2. Somebody should help us read illustration 2.
MacBook Air Investment Limited, a company approved by the Securities and Exchange Commission to carry out and operate real estate investment scheme in Sokoto, Nigeria, makes up its account on 31st July. Below is the extract from the annual returns for 2023 year of assessments. Rental income, 750 million and 150. Dividend income, 150 million to 50. Gains from disposal of sales of assets, 75 million, 125, 250. Management fees received, 125 to 34, 450. Profits from other related business, 227, 446, 100. Allowable expenses, 247, 875,000. Additional information: A. Distribution made to the shareholders on 30th September 2022 as stated below. Rental income, 650 million, 125. Dividend income, 75 million, 135, 150. Profit from related business comprises profit from sale of property, expenses incurred, sales agents commission, brokerage, security, advertisement, other property expenses, profits from other related business. Capital allowance for the year is 250 million required. Computes the company income tax and tertiary education tax for 2023 year of assessment and comments on the tax implication of company's transaction as related to real estate investment company in accordance to CETA.
Thank you very much. Thank you. if you want to solve a question on real estate investment company, you want to compute their tax. First thing you need to do, my people, add all the income together. When you add all the income together, you get total income. You now less expenses. You get adjusted profits. From adjusted profit, what do you less before you can compute tax? What do you less from adjusted profits?
Non-taxable income.
Capital allowance. Once you get adjusted profit, you remove capital what? Allowance. You now get your total profit. You can now compute your company income tax and education tax. So, looking at this question of MacBook Investment Limited, in MacBook Year Investment Limited, first, the rental income is how much? 750 million 150 naira. 750 150 naira. That is the rental income. Can we all see that? Can we see that?
Yes.
This
Yes.
750 150 naira. We ask ourselves, is it going to be subjected to tax or not subjected to tax? Do we have additional information pertaining to this rental income? Yes, we have additional information pertaining to them. Additional information A. They say they distribute to the shareholder on 30th September 2020 what? 2022. The accounting year end of this company is when?
July.
That means the accounting year end is July 2022. They now distribute the rental income and dividend income to the shareholder 30th September 2022. Is it still within the 12 months after the end of the year?
Yes.
You know, the law said if you don't want to subject rental income and dividend income to tax, such rental income and dividend income must be distributed to the shareholder within how many months?
12 months.
12 months. So from 1st of July 31st is the accounting year. July 31st of July 2022. Why the distribution was made 30th September 2022? Is it still within the 12 months?
Yes, it's within the 12
No.
months.
No.
Yes, it's within the 12 months.
Eh.
Yeah. July 31st of July 2022. And they distribute it after like, is it like 3 months or 4 months? It's still within the 12 months. He has passed, that means this company, they pass one criteria first in terms of the number of months after the end of the year that they must distribute either the dividend income or rental income. Second is,
Excuse me, sir.
okay,
Yes, sir. Are we not using the accounting year? Like if they mix up their account to 31st now. So I believe that there are 12 years lapsed in that 31st July, which means the account is from maybe last year June till July. Or are we using the
yes,
normal
the accounting
accounting
year
year?
end, wait. The accounting year end of this company is when?
It's July.
31st of July 2022.
Yes, sir.
The law said rental income and dividend income must be distributed within 12 months after the end of what? After
Okay.
the end of the financial year.
All right. Thank you, sir.
Okay. Now, How much rental income was distributed? 650. We now look at it. 650 all over the total amount. How much is he going to give you?
86.66%.
So let's look at the solution. MacBook Air Investment Limited. Computation of company income tax and tertiary education tax for the year 2023 year of assessment. First income that they have is what? Rental income. 750 million, 150. Rental income exempted from tax. We want to know whether this rental income will be exempted from tax or not exempted. Distribution that they made to the shareholder, 650 all over 750. That is almost 87%. Why distribution require for exemption? Before you can be exempted from tax from rental income, what is the distribution require? 75%. Since what they distributed is more than what is required, that means the whole 750 million will be exempted from tax. You can see I put exempted. That means this 750 million, everything will be exempted from tax. Second one, dividend income. For the dividend income, how much do we have as dividend income? The dividend income is 150 million, 250. Can we all see that?
Yes, sir.
Yes.
How much out of the dividend income was distributed to the shareholder? How much?
75 million. 75 million,
75 million.
135, 150.
Let's look at the percentage. When you look at 75 million, 135, 150, all over the total amount, 150 million, 150. What percentage is it giving us? That means it will give us how many percent?
50%.
50%. According to the section 19 of CETA, what does the section 19 require? The section 19 said you must distribute at least 75%. Hello? Can you hear me?
Yes.
Now, for dividend income, is it going to be exempted from tax or subjected to tax? Dividend income, is it going to be exempted or subjected?
Subjected.
Be subjected.
It will be subjected because what was actually distributed is less than 75%. So that means the entire 150 million will be subjected to tax. We have looked at dividend income. Let's go back. What income do we have again? Gain from disposal of assets. You just take that as part of your income. Under your income, under the income, another income that will be tax is gain from disposal of assets. Under real estate investment company, gain from disposal of assets is subjected to tax. Gain from disposal of assets, that means what that means is that they assume that the disposal, the gain you make is from disposal of properties and it is subjected to tax. You can see I've put it under
Sorry,
the
sir.
income.
Can't you categorize that as capital gain tax?
When a real estate investment company sell property, sell building, sell land, they will not pay capital gain tax because it is their primary what? It is their primary business. It will not be subjected to capital gain. It will be subjected to company income tax. Do you understand?
Okay, sir.
Because this is their primary business. Let's go back to the income again. Which income do we have apart from gain? We have what? Another income we have is what? Under the income, management fee received. Management fee received is an income too. This management fee received, anything professional fee, management fee, it normally attract what? Professional fee, management fee. They normally attract what type of tax at source?
Withholding tax.
Withholding tax. Now, management fee received, is it the net of withholding tax or gross of withholding tax or before withholding tax? This amount, is it net of withholding tax or gross of withholding tax?
Not stated, sir.
We
Since this is
assume
not
gross.
stated, we shall assume it's gross.
Management fee received. If I render professional service to you, audit fee, if you want to pay me my fee, is it the net you are going to pay me or the gross?
It's the net,
Net.
sir. Net.
Net. Look at this statement. Management fee received. If this company want to receive management fee, is it the net that they will receive or the gross?
The net. The sender would have deducted the withholding tax from source.
Yes. So that means this statement, it means what? Because of this received, it is net, it's not gross. It is what? Net. Because they said management fee received. That means when you want to receive the management fee as an income to you, it is the net you received. It's not the gross that will go to your income, that will be credited to your account. Do we understand? Now, since we receive net, while solving the question, what do we do? Anytime you receive net of withholding tax, while solving the question, what do you do back?
You gross it.
To gross it back.
You gross it back. So management fee, what is the withholding tax rate on management fee? My people, what is the withholding tax rate on management fee?
10%.
10%. So if I want to gross it back, what do I do? I will
100
say
over 90.
I think
100 over 90, Abby, times 125, 234, 450. Oh yeah, check. Oh yeah, confirm. Is it correct?
139. Yes, sir.
139, 149, 389. That is correct. That is stated. You put it under the income again. Another income we have in the question. What other income do we have in the question? They say profit from other related business. Profit from what? It's an income. But this profit of other related business, the breakdown of it is given to us in the note B. How they get this profit from other related business. The breakdown is stated in which note? The breakdown is stated in the note B. I'll take it. So the breakdown is stated. How they get that 227,446,000. They said turnover. They now less expenses. The less expenses. That is how they get 227,446. Why doing the computation of tax? If you want to compute taxation of real estate investment, you must show the income first before expenses. So this profit on other related business, what you need to do, since you have the breakdown, just take the turnover first. That turnover from sales of property, you come and put it under the income. That turnover from sales of property, you come and put it as part of your income. Why doing the expenses? The relevant expenses from that sales of property too will be used as an expenses. So, what is the total income now? First, rental income. Second, turnover from sales of property, management fee, gain from disposal of assets. You add all the income together. At the end of the day, your total income is how much? 864,274,889. 864,274,88 what? 889. Do we understand? Do we understand?
Yes, sir.
Yes, sir.
After that, you will now less expenses. Let's go to the question. What kind of expenses do we have in the question? Less allowable expenses. First, in the table, after profit of other related business, they said allowable expenses is how much? There is one allowable expenses.
247,875 million.
You come and less it as one of the allowable expenses. 247,875. You can see is the last one I used. Apart from that allowable expenses, there is an expenses that relate to that turnover of 500 million. There is an expenses that relate to it. What expenses relate to it? Sales what?
Sales agent's commission.
Number one. Brokerage fee. Number 2,
Security.
sales agent commission, brokerage fee, security, advertisement, other property expenses. You will come and less all of them. Sales agent commission 23,150,000. Brokerage fee 74,153,900. Security 5 million. Advertisements 16.5 million. So at the end of the day, all the total expenses is how much? All the total expenses is 520,428,900. When you minus it from the total income, you get an adjusted profit of how much? 343,845,989. 343,845,989. From the adjusted profit, what do you less?
Capital allowance.
Capital allowance. In the question, how much is capital allowance? How much is capital allowance for the year?
250 million. 250 million.
250 million. 250 million. These 250 million, look at the profit available. 343,845,000. We want to minus 250 million from it. Don't you think 250 million is too much? Since it's not a manufacturing company, it's a real estate company. That means we can restrict the profit. We can restrict what? We can restrict the capital allowance, sorry. The capital allowance will be restricted. It's going to be restricted to how much?
So third.
Of the adjusted profit. So it's going to be restricted to 2/3 of the adjusted profit. 2/3 of 343,845,989. How much is the 2/3? How much? 2/3 of it. The 2/3 of it is going to give us 229,230,659. Can we see that? Two-thirds of 343,845,989. It will give us 229,230,659. That means that is the capital allowance you are going to relieve. The balance of the capital allowance is going to be carried forward. The capital allowance carried forward is 20,769,341. 20 million 769 341. So if you minus the capital allowance that we relieve from the adjusted profits, the total profit for the year is now going to be what? 114,000 615 330. 114 615 330. 114 615 330. Now, you need to compute the tax liability. How do we compute the tax liability? The company income tax at 30%. 30% of the total profits. 30% of 114,615 330. 30% of it is going to give us what? 34 million 384 599. 34 million 384 599. This is the company income tax that they're supposed to pay. Mind you, withholding tax has been deducted from one of his income at source. If you go to one of his income, which one withholding tax has been deducted at source? Which income attracts withholding tax at source?
Management fee received.
Management fee received. How much is the withholding tax? 10% of the gross. That means 10% of 139,149,389. 10% of it. 10% of 139,149,389. The 10% of it. The 10% of it is what? It will give us how much? 10% of it will give us 13,914,939. 13,914,939. That means when you minus that withholding tax on management fee from the company income tax, that means the net company income tax payable by the company is going to be 20,469,660. 20,469,660. $20,469,660. Education tax. Education tax, what percentage? We use 3% of adjusted profit. 3% of adjusted profit. That means 3% of 343,845,989. 3% of it. That will give us 10,315,380. 10,315,380. So these are the tax liability that the company will pay. Do we have any question?
Sorry, sir.
Any
The
issue?
education tax deducted, won't it have any effect on the net tax payable?
No, 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 no.
You know, the accessible profit is already 343,845 before we deducted the capital allowance and everything from it. So we already have a balance of this thing.
Education tax is computed on accessible profit or adjusted profits. So it's computed on accessible profit or adjusted profit. Why company income tax is computed on total profit. So it's not going to have any effects.
What I'm saying is it's still going to affect the profit of the year. Because is
Which
that,
profit of the year? How is it going to affect it? Explain it.
so me, I felt, when the total accessible profit is 343 million, they will now deduct the capital allowance, which is 220 million. And we have the total profit 114,615 now.
Yes.
Now, if we deduct this education tax from 10 million, of 10,315 from 343 million, it shouldn't be the
We
same
are not
again.
deducting it now. Are we deducting tax from adjusted profit? We don't deduct tax from it. We compute tax separate. That means this company will pay company income tax of 20,469,000. They will also pay education tax of how much? 10,315,380. We are not deducting it. Do you see me deducting it? Check very well.
Okay, sir.
They won't pay police development levy.
You can compute it. You can compute it.
Okay.
They will pay. They will pay. That is 0.005% of adjusted profit, which is the accessible profit.
Okay, excuse me, sir.
Yes.
Okay, sir, if the this dividends and rental income, if they meet the threshold of 75% exactly, does it mean is the exempt, the tax exempt, is it going to be restricted to that 75% or is going to be on the total amount of the rental income?
It's going to be on the total amount.
Thank you.
Yes. Any question again? So in the absence of no question, we now move to the next topic. It's just a structural topic. It is called education tax in Nigeria. Education tax in Nigeria. Tertiary education tax in Nigeria. Tertiary education tax in Nigeria. So please, taxation of real estate investment company. I will advise us, let's study it very well. Let's practice it. Let's practice it very well, please. After this class, go back and solve it on your own. Look at it. So, like I said, the next topic is tertiary education tax in Nigeria. We start with what do we understand by tertiary education tax? Why do we impose tertiary education tax? Tertiary education tax is tax imposed by who? Tertiary Education Trust Fund on accessible profit of all companies registered in Nigeria. It is imposed on accessible profit of all companies registered in Nigeria. The current rate of tertiary education tax is 3%. However, if you are a small company, that means presently small company turnover is 25 million below. you are not expected to pay tertiary education tax. As for next year, the turnover threshold for small company have been increased to how much? 50 million. That means as for next year, if your turnover is 50 million below, you will not pay company income tax. You will not also pay tertiary education tax. This tertiary education tax, FRS, they will be the one to assess and administer it. They assess it and administer it on behalf of who? On behalf of a body called TED Fund, Tertiary Education Trust Fund. This money, they are using it to upgrade the public institution in terms of facilities, classroom, lecture theaters, computer laboratory, library, so many other facilities that is needed in the public tertiary institution. This tertiary education tax, they normally use it to support public university, either state or federal government university. Public polytechnic, either federal or state government polytechnic. And public college of education. These are the 3 public institutions that they are using TED Fund to upgrade. What are the objectives of tertiary education tax? What objective do we tend to derive from tertiary education tax? Tertiary education tax was formerly called education tax, and it was introduced in 1993. When it was called education tax in 1993, they are using the money for public institution. That means they can use the money for public university, public polytechnic, public college of education, and public secondary school, public primary school. But in 2011, they made an amendment to it. They now started refining it to tertiary education tax. They are not calling it education tax again. They call it tertiary education tax. As from 2011, they now restrict it to only tertiary institution. What are the objectives? Why do we introduce TED Fund, Tertiary Education Task Fund? Why? Number 1 objective is to provide maintenance, to provide essential physical infrastructure for teaching and learning, to provide essential physical infrastructure for teaching and what? And learning. Another one, to provide instructional material and equipment. To provide instructional material and equipment. Another one, to support research and publications. To support what? Research and publication. Another objective, to aid academic staff training and development. To aid academic staff training and development. Why the last objective is to attend to any need that is in the opinion of the board that that will improve the quality and maintenance of higher educational institution in Nigeria. Let me repeat this again. To attend to any need that is in the opinion of the board that will improve the quality and maintenance of standard in the higher education institution in Nigeria. This is objective of tertiary education task. Now, what are the areas covered by this intervention fund? Because this money, they use it to intervene in the public institution, to support the public institution. What are the areas that they will use to intervene? The intervention fund cover the area of what? Center of excellence. High impact intervention. Disaster recovery is another intervention of TED fund. National Research Fund is another area that TED fund cover. Higher education book development is another area that TED fund cover. Academic staff training and development is another area that TED fund cover. Physical infrastructure upgrade is one of the major areas covered by TED fund. Postdoctoral fellowship is also covered by TED fund. Teaching practice, TP. While you are still in school, you went to teaching practice. If they pay you some allowance, those allowances coming from TED fund. Library development is another intervention of TED fund. Conference attendance is another intervention of TED fund. Now, what are the basis of computation of TED fund? How do we compute TED fund? We have been doing that before. TED fund is computed presently based on 3% of accessible profit or adjusted profits. TED fund is computed based on 3% of what? Accessible profit or adjusted profits. That is how we compute TED fund. Imposition of TED fund, imposition of tertiary education tax. TED fund is imposed, is administered, collected, imposed by Federal Inland Revenue Service on behalf of Tertiary Education Trust Fund. Assessment of trust fund. FRS assess and collect TED funds based along with the company income tax. And TED fund is assessed on preceding year basis. We assess TED fund. When FRS want to collect company income tax, they will ask the company to pay education tax too. And this is assessed on a preceding year basis. Collection of TED fund. The Acts mandate FRS to collect TED fund. And TED fund must be collected within 60 days after FRS serve notice of assessment. But in practice, third fund is collected along with the company income tax, which means within 6 months after the end of the year, that is 30th of June after the end of the year. If you want to collect third fund, in the return, what are the content of third fund return? If you want to file third fund return, what are the content of third fund return? One of the content of third fund return is that the name of the company making the payment. The name of what? The name of the company making the payment. The amount collected. The amount what? Collected. The assessable profit of the company for the accounting period. The assessable profit of the company for the what? Accounting period. One of the content, the name of the company making the payment. Second, the amount collected. Third, the assessable profit for the accounting period. Why another one? Any other information that may be required for the purpose of administration or third fund. Any other information that may be required for the purpose of administration or third fund. Now, exemption of third fund. Who are exempted from third fund? Like I said, any company that their turnover is less than 25 million, as stated in the Finance Act 2020, they are exempted from payment of third fund. They are exempted from the payment of third fund. So, what are the composition of third fund board of trustee? What are the composition of third fund board of trustee? The board of trustee of third fund comprises of the chairman. They have a chairman. The chairman must be person that have knowledge in finance and administration matter. And apart from the chairman, they have 6 members representing each geopolitical zone. Apart from the chairman, they have 6 members representing each geopolitical zone. Apart from that, they also have a representative of the Federal Ministry of Education as part of the member.
We can't hear you, sir.
Hello, can you hear me? Hello?
We
Yes,
can
we
hear you now.
Oh, sorry.
Now,
Okay, I'm talking of composition of third fund board of trustee. Under the composition of third fund board of trustee, I said representative from Nigeria University, representative from polytechnics, representative from College of Education. They are also part of the member of third fund board of trustees. Now, let's look at function of third fund board of trustee. What are their function? What are the function of third fund board of trustee? One of the function is to monitor and ensure collection of tertiary education tax by the FRS to monitor and ensure collection of tertiary education tax by who? By the FRS. Another function is to manage and disburse the tax. That third fund tax, it is this board of trustees that will manage it and disburse it to each of the university, polytechnic, and college of education. Another function of third fund board of trustees is to receive requests, approve admittable project after due consideration. They will receive requests and approve admittable project after due consideration. Each of the university, they will send request to third fund. Third fund, oh, please, we need come and help us construct 1,005 lecture theater. Come and help us to construct library room. Come and help us to construct IT and so on like that. They will receive the request. They will now be the one to approve that this is the project we are doing this year. Another function is to monitor and evaluate execution of the project. To monitor and evaluate what? Execution of the project. Another function of the board of trustees is to invest the funds in an appropriate and safe security. To invest the funds in an appropriate and safe security. If that third fund, once they receive it from FRS, if they have not made use of it, if they don't want to make use of it presently, they can go and put it in a fixed deposit that will be generating interest. Another function is to make and issue guideline from time to time to all beneficiaries on disbursement from the fund on the use of money received from the fund. It's one of their functions. All these are the function of third fund board of trustees. They also review progress and suggest improvement within the provision of the arts. They review progress, and suggest improvement within the provision of what? Of the arts. Now, how do we allocate third fund? This tertiary education tax collected by company, how do we allocate it?
I want to ask one question, sir. This function of the test fund that we just listed that now, we have like maybe 10 or 12 of them listed. In exam, in the exam question, when we are being asked, okay, mentioned functions of test fund. What's the minimum number in which we can just list if we can't remember everything?
5. Once you get 5, you are okay. You are okay. They will not ask you to list all the 10. They cannot put mark for all the 10. There are other questions. The highest they can ask you is 5. Any other question? You can ask so. Now, how do we share this third fund task? This TET task, how do we share it among university, polytechnic, and college of education? They share it based on ratio 2:1:1. That means university collect 50%, polytechnic collect 25%, and college of education also collect how many percent? 25%. University collect 50%. Polytechnic collect 25%. College of Education also collect how much? 25%. So that is how it was being shared. What is offenses and penalties relating to tertiary education tax? One of the offenses and penalties when you are given a notice of assessment of tertiary education tax. That notice of assessment issued to you by FRS, you must pay it within 60 days. If you don't pay it within 60 days, you'll be entitled, you will pay a penalty of 5% of the tax plus interest at bank lending rate. I said one of the penalties, you must pay your education tax within 60 days from the date when FRS issue notice of assessment to you. If you fail to pay within that 60 days, you will pay a penalty. What is the penalty? Penalty is 5% of the amount of tax not paid plus interest at prevailing commercial rates. However, when any of the officer mismanage the third fund, they will be entitled to penalty of 1 million naira or imprisonment of 6 months. 1 million naira or imprisonment of what? 6 months. So this is part of the penalties. Again, company must file return for third fund 6 months after the end of the year, along with the company income tax. Failure to file return for third fund within 6 months after the end of the year, along with the company income tax, is going to attract a penalty of 1 million naira or 6 months imprisonment. So, ladies and gentlemen, my laptop is almost low. So, this is where I'm going to stop for today. In case you have any question, any observation, you can point it out.
Yes,
Do you have any question?
I have an observation, and
Okay.
I believe the purpose of learning all these things is to correct some things which I can't too supposed to check. If they
Yeah.
say if um, a board member mismanage fund, they will give the person 6 months imprisonment and or a fine of 1 million. If I'm to manage hundreds of billion and I know that my fine is just 1 million or just 6 months, I don't think that thing is I don't see it as reasonable enough. And that's why many officials are still committing many offenses. Because if me that did not pay, that I'm a businessman, I will be fined 5% within 6 months for not paying a third fund and also at the prevailing rate. That is even more than the punishment of the person that embezzled the money.
Your observation is well noted, my brother. But you see, this thing is part of the governance we have in Nigeria. They are the challenges. You know, those who are making the law, they are the ones stealing the money. And they would like to make the law that will favor them. They are the ones stealing the money. Like I was telling one of my colleagues yesterday, this Nigeria Tax Act that was signed, people, the tax consultant, they are doing a lot of workshop. Tax compliance, tax compliance, tax compliance. I attended a workshop on Thursday. I told them that you people are saying tax compliance, tax compliance. Taxpayer must pay tax, taxpayer must pay tax. What about the management of the tax collected? All these politicians, how much tax they are paying? Look at how they are spending money, how they are embezzling money. Do you understand? My own is, I'm not saying you should not collect tax. I'm not saying you should not tax every income of Nigeria. But you as a tax consultant, that you are the ambassador, you are creating you are serving as a mouthpiece to government. You are advocating for government. Collection of tax. Nigeria tax is low. Why can't you advise government that cut down your budget too? Monitor your officials. Most of the politicians, they are not paying tax. The Senate, can you imagine how much Senate is earning every month? Is Senate paying tax? Consistency project, this security allowance, they need to work on that. Because all these things, because when most of my colleagues, tax consultants, they will be comparing Nigeria with UK. The tax compliance rate in UK is 93%, while the tax compliance rate in Nigeria is 25%. That means 75% of Nigeria are not paying tax. What can we do to ensure that those people are brought to the tax net? We need to have a lot of work to do. But the level of corruption that we have in UK, is it the same we have in Nigeria? Especially our politicians. Those occupying political position, office in UK, what are the compensation given to them compared to what they will collect in Nigeria? Look at how they are spending money in Nigeria. Most of the politicians, they are building houses outside the country, buying private jets. Nobody asks them. But when you are a businessman making it, that is when they will know that you need to pay tax. You are not paying the right tax. Taxation of high network individual. So my brother, this is generic, which to me, I think when you want to say you want to do a reform, one of the fiscal reform that government need to do is cutting down government budget spending. You understand? And reviewing the allowance of the political office holder. They need to review the allowance. Because 70% of the tax collected is being managed, is being siphoned by the politician. They will say they will want to use it to construct Lagos Calabar Coastal Rail. They will give the contract to themselves. They will inflate the contract. They have made excess money, whereas ordinary man is struggling on how to make it. Like the new tax act now. Under the new tax act, I was reading this yesterday evening. There is a particular section under the Nigeria Tax Act that mandate bank that any transaction that individual receive, maybe I think more than 5 million, when you receive a credit alert as an individual more than 5 million, bank must notify tax authority, the relevant tax authority, within 7 days. Look at it. Let's say my brother sent me money from abroad to help him renovate his house. They will not know the basis of the money. They will say it's an income, whereas it's not an income. Those are the things that I'm trying, because I always come from constructive school of thought. So I don't believe, I know Nigeria is not paying tax. The government too need to work to ensure that we, under the tax, we have what is called, there is one principle of taxation that said the benefits of payment of tax should outweigh the tax itself. People should receive benefit. They should see value for what they are paying for. Once they see, it will encourage them from paying. Look at the issue of surcharge that was introduced by the that they want to commence from January 2026. It's going to have a lot of impact on price of goods and services, because the price of goods and services is determined by price of refinery products, diesel, price of. Now, if you add 5% to cost of diesel, if you have 5% to cost of petrol, if you have 5% to cost of gas, everything will increase again. And they are saying minimum wage earner is not going to pay tax. What can 100,000 buy in a month, even if you are collecting 100,000 as your minimum wage every month in this economy? Even if you have, if somebody have a great man, have one wife, two children, one wife, and is earning 100,000, is it going to sustain him with this economy? It's not. Let's be realistic to ourselves. Somebody earning 300,000 is not earning income in this present Nigeria every month. If you are taking your take home is 300,000, because all the money we will be using it for feeding, transport, and you have to do some other thing, house rent. You will not have savings. You will not have savings because of price of goods and services has increased. Whereas, what is the impact? Is because of the effect of the subsidy removal. It will have a long-time effect on us. The subsidy removal supposed to be a gradual process. It should not be just one-off. It should be a gradual process so that it can stabilize the economy. And when you are removing subsidy, you have to have a palliative, especially for the lower income earner. Those who, you understand, having external reserve in the foreign external reserve has increased, this has increased. That one cannot create impact on Nigeria. The lower income earner, they are the one controlling the economy because they are the largest population in the economy. If they cannot sustain, it will have effect on the economy. So that is what I can contribute so far. Any other question? Like you all know, this tertiary education tax, as from next year, there will not be tertiary education tax again. It has been replaced by another tax called what? Who can tell me the name of tax that is used to replace tertiary education tax? Development levy. And that development levy is now 4%. Development levy have replaced tertiary education tax. That means as from next year, no tertiary education tax again. It has been moved under development tax. I'm not saying there will not be TED fund again. No. There is now TED fund, but TED fund is now under development levy. The amount that will be paid from to TED fund is going to be from the development tax of 4%. That development tax of 4%, they are going to share it to TED fund, they will share it to NIGDA, they will share it to police. So,
Okay, so
as from next year,
consolidate it.
yes, no more TED fund again.
Well,
What we have is development tax.
but still, sir, I still see ICAN as a toothless dog because some of these things they call for summits, they call for many things. And I hear people say Nigerians don't pay tax because I run a small business, and when Lagos State government came for tax or something, I fought with them and I chased them away. I said we are not going to pay. And they later backed out because we have our reasons. They were saying people should come and pay. We said no. their salaries are not fixed yet because it's still a growing company and they are not registering yet. When we are ready, we'll come to them. After so many back and forth, they have to back out. Nigerians are paying a lot of tax. What I'm saying is, even up to the poorest person that is doing what they call kaya or abaru, you see people collecting 20, 15 naira from these people, but we are not putting these things in official way or legalizing it. So people are enriching their pockets, taking taxes from people as indirect taxes, because the indirect taxes an average Nigeria is paying is too much. They collect from DAFO, they collect from. In
I
fact,
agree with you, my brother. All these are multiple taxes, indirect,
yes,
especially indirect taxes. They are
yes,
paying too much. Which one of these, when they started this tax reform act, they say one of the objective is to address the issue of multiple taxation, indirect taxes. But reviewing the tax act, I've not seen where they have addressed the issue of indirect taxes.
Tinubu knows the loophole. He's a great. See, this thing is not solving
Please,
anything.
please don't let us personalize. Don't let us personalize.
He's an
This is on,
accountant now.
we are on social media. Don't let us personalize. Don't let us
Okay,
personalize. So
it's all
that
right.
is the thing. Like I agree with you, my brother. Government need to work on harmonization of the indirect tax. If
What I'm
I
trying to
didn't
say,
drive out in a day, if I enter
yes,
commercial bus, sometimes I will just enter bus. Let me feel from one bus stop to another, you will see them on the road. There was a driver, he loaded the bus in the bus stop. From the bus stop, out of the total passenger fee, passenger money of 25,000, the Agbero have already collected 3,000. It remained how much? 22,000. Why going on the road? You reach a particular point. Some people come on the road. He drop 500. Why going further? He met some group of last man. I just saw one man. He's doing like this. He's not wearing last man uniform. That want to collect 1,000. You know, I'm an accountant. I'm trying to, out of 28,000, out of 20, how much thousand? You have already spent almost like 4,500 already. Are you not going to buy fuel?
yes,
Going further again, we see another one, 500. Can you imagine if the man now buy fuel, how much is he going to remain?
yes,
I told the man that day that you are not doing business, so you are just wasting your time. Because at the end of the day, when you remove money for fuel, what are you going to take home for your family? What are you going to provide for car maintenance?
yeah.
Those are the issues I always tell them. I attended the workshop. I argue with them that please help us, state government. They should address the issue of multiple taxation. Indirect taxes is too much. It's too
Yes,
much.
it's too much.
Assuming that indirect taxes is harmonized and government control it, a lot of money. Look at the transport sector. All these Agbero collecting money. Some of them are buying private jets, buying big house in Lekki, and they didn't go to school.
Yes,
Because the money they collected is not accounted for. They don't account for it that
exactly,
this is what we realize in a year. This is what we want to use it for. Collecting and
exactly.
what? Sharing. These are one of the issues that you understand.
Yes,
I also tell them, we need to tax this income now, 25%. This. What about the informal sectors? Informal sectors too. Me and you, we are paying our right tax because we are working for company. What about the informal sectors?
yes.
So, thank you for having me.